Are advanced trading orders better than the usual ones in the cryptocurrency trading? So a week has passed since our first video about crypto market trading orders, so nothing much has changed really. So the bullish market hasn't come yet. So it means we keep learning while we have some time, because the bullish trend might be actually closer than you think. Well, just calm down, I'll explain everything later. Okay, so today we continue with spot market trading. Yeah, it's part 2, and we proceed to more advanced trading orders. By the way, if you haven't seen the first video about basic trading orders, just be sure to check it out, as it has all the fundamental info in there. It's just, I fear that without that, you'll be struggling to understand the following topic, so go on and watch it. Anyways, today we talk about advanced trading orders. So why they are called so, and how and when to use them in trading in this bearish or even bullish market. So let's waste no time and let's roll. Okay, but first about that incoming bullish trend I've mentioned earlier. So while we learn trading in this bearish market, there is actually bullish news and signs of crypto adoption, all leading to the belief in the imminent bull run. So let's quickly look through these news and collect all the signals for our future trading. First news is Visa choosing Solana for stablecoin USDC settlement, which is actually a significant development. And yeah, Solana has shown pretty consistent growth these days. Well, despite being disliked by crypto community, there is still hope that it's likely to reach new highs in the next bull run. In Korea Blockchain Week, Arthur Hayes said the relationship between Bitcoin and interest rates is breaking down. So the US should be heading into a recession, and during that time, banks will be bailed out to prevent the failure of the banking sector, either through acquisition or direct stimulus, as the US cannot afford to lose confidence in the dollar. So risk assets like BTC should be nowhere near their current values, thanks to the steepest Fed rate hike cycles in decades. So it seems like they should have killed BTC and other risk assets, but actually a new relationship between these two is forming. Actually, the opposite is happening, and economists have increasingly corrected their recession forecast, and Bitcoin has actually doubled since crypto exchange FTX's multi-billion collapse. Whether the Fed raises or cuts, we are in a good position as a cryptocurrency industry, said Hayes. Okay, the next one. The US government may not want to shut down stablecoins. It's just not in their interest, as they play a major role in the bullish case of the US dollar and its dominance in the global market. Besides, Tether has become a major buyer of US government debt since $72.5 billion in exposure, which is actually significant. It's just because the US government needs buyer for its debt to avoid becoming the buyer of last resort. So the government is buying US government debt, which is actually important for the whole macroeconomy. And by the way, don't forget about the SBF court case, as its outcome can significantly affect crypto exchanges and actually the whole crypto industry, causing turbulence. However, despite negative sentiment, it's still better to keep some funds available to buy Bitcoin. Now, imagine we have all those trading signals and it's time for some trade. But what if we want to trade on another level, like more advanced, to better manage positions and minimize potential losses? So what trading order should we use? Among many different pro options, there are actually two that stand out: OCO orders and trailing stop. So let's dive into each of them. So you want to double down on your strategy? Enter the OCO. One cancels the other order. Basically, OCO orders are a combination of two limit orders that are linked together, and they are used to manage risk and potential profit in trading. An OCO order consists of two components: a take profit order and a stop loss order. These orders are placed simultaneously, and if one of them gets executed, the other is automatically cancelled. So the key idea is that you want to secure your profits when the market moves in your favor, or limit your losses if the market goes against your trade. So it's like placing two bets at once, and if one order gets executed, the other bows out gracefully. So let's explore these so-called bets. First is take profit order. This is a limit order to sell a cryptocurrency at a predetermined price that is higher than the current market value. When the market reaches this price, the order is executed, locking in your profit. And the second one, stop loss order. This is a limit order to sell a crypto at a predetermined price that is lower than the current market value. So if the market moves against your trade and reaches this price, the order is executed to limit your potential future losses. As you can see, OCO orders are just perfect for those moments when the market can't make up its mind. And yeah, OCO orders are particularly useful for traders who want to set predefined profit and loss levels without constantly monitoring the market. Okay, the next one is trailing stop. A trailing stop is a dynamic stop-loss order that adjusts itself as the price of cryptocurrency moves in your favor. It's designed to help traders capture profits while also protecting against potential reversals in the market. With a trailing stop, you set a certain percentage of dollar amount below the current market price at which the stop order is initially placed. As the market price increases in your direction of your trade, the trailing stop follows it, maintaining the specified distance, like percentage or dollar amount, below the market price. So if the market price reverses and moves against your trade, the stop order is triggered when it reaches the trailing stop level, locking in your profits. As you can see, the key benefit of a trailing stop is that it allows you to capitalize in favorable price movements while also limiting your potential losses. Yeah, it's a quite useful tool for trend-following traders who want to stay in winning positions as long as the trend is in their favor, but exit if the trend reverses. So both OCO orders and trailing stops are advanced trading strategies, and the availability of those order types may vary depending on the cryptocurrency exchange and trading platform you use. And of course, both orders, OCO and trailing stops, require careful consideration of market conditions and also risk management. So traders should thoroughly understand these order types and use them in conjunction with their overall trading strategy to achieve their trading goals. That is why it's not always about recognizing when to buy and sell, but how to do that. It is actually crucial in the cryptocurrency market, and neglecting this how aspect, well, it often leads to losing potential profits or even losses. That is why to be prepared for the next crypto bull run, it's actually crucial to study these different trading orders now. And I wouldn't say these trading orders are, well, better, but actually more precise and adjustable. Just requires a little more time for studying and practicing them. And by the way, well, it may sound corny, but don't forget to trust your gut instinct when to buy or sell, as indicators can't always provide the perfect timing. And to develop that instinct, just don't forget to trade small amounts of money first. Yeah, it's not just about making money, but also about learning and developing that skill. It's just without this skill, most traders end up losing money. And that's why it is important to start developing the feeling for when a chart needs to be bought and sold.